Thanks so much for joining us, everybody, for PPP and the stimulus. Here we go again. This is our first free CLE live webinar of 2021. So I'm very happy to kick us off with two of our fabulous speakers from 2020. We were just reminiscing this morning and realized that this is our fourth CLE with this duo on PPP loans. So it is my great pleasure to have them back for more. I'm going to get us started with some messages from our sponsors. Those are the folks that are footing the bill for these programs, making it free for all of you. So I hope that you will be patient and respectful and listen to their messages, and more importantly, use their services should you find yourself in need.
At Paramount Settlement Planning, we've worked with thousands of injury victims and their families over the past 18 years to help establish settlement protection plans that are as resilient as they are. A plan where their settlement dollars are immune to the negative shifts in the market and taxation, while providing guaranteed payment streams in these unpredictable times. At Paramount, our plans are uniquely tailored to meet the individual needs of the injury victim while preserving government benefits that they rely on. So give us a call at Paramount Settlement Planning to find out about our process and how we protect you.
Hi, I'm Joseph Gonzalez with Physician Life Care Planning. I want you to know that all of our Physician Life Care Planners, of which we now have 6 to serve New York State, are board-certified physical medicine and rehabilitation doctors. Our life care plans have been effective for medical malpractice cases, and our life care planners are able to create an independent, comprehensive, and credible assessment of a claimant's condition and future medical requirements, which then creates a strong foundation for all of your damages valuation assessments. So please contact me to discuss your next damages services needs. Thank you.
Thank you so much, Joseph and Paul and all of our sponsors for supporting the Academy. Okay, so I'm going to turn it over to Cliff Robert. Cliff is the principal of Robert & Robert PLLC, is consistently sought out by New York's most prominent lawyers, law firms, and businesses in high-stakes bet the ranch litigation. His practice focuses on business divorce and crisis management. We all hope to never need him, but in case you do, it is good to have him in your Rolodex. Take it away, Cliff.
Thanks, Michelle. I don't know that I've ever had quite an introduction like that, but thank you. First of all, happy and healthy New Year to everyone that's with us today by Zoom. I don't think any issue has come to the forefront of practicing lawyers more than the effect that the PPP loans have on them and their practices. We had our first series of these lectures back in the early spring when the PPP was in its infancy. And since then, there have been many changes to the plan, and most recently, that which was passed within the last few days. As a matter of fact, we were hoping to do this lecture last week, but because the status of the legislation and the exact parameters of it were uncertain, we decided to wait till now. Having said that, even though we know Bob is going to give us very insightful and important information, I think everyone needs to realize that this is a moving target, and that from time to time there'll be certain changes. And as Bob will explain, even certain decisions from the SBA we're still waiting for with regard to forms dealing with forgiveness and otherwise. So I think we're in store for a very interesting hour. I'd like to introduce Bob Hoberman, who's the managing partner of Hoberman Lesser. As I've said in the past, Bob is an excellent accountant. Not only is he an excellent business accountant, but also a forensic accountant, and works regularly with lawyers and law firms in the needs that they have, not only in their businesses, but also dealing with escrow issues. So without further ado, let me turn this over to Bob. And as Michelle said, we'll go till about 2 o'clock. And at that point, we'll take questions and answers. So Bob, it's all yours.
Okay, thank you, Cliff, for the warm introduction. I've known Cliff for many years. He's a great friend and a world-class attorney that gives dead-on legal advice, combined with the real-world practical experience, and that makes him, as everyone has said before him, an invaluable part of any team. When you need help in a complex matter, Cliff's the guy you want to reach out to.
So I think we can end the CLE now. That's fine.
Wait, I haven't given your phone number and your bank account number. Hold on.
Okay.
I also want to thank Michelle and the people at the New York State Academy for having me back for what I'm sure is an unprecedented 4th time to speak about the PPP that was created under the CARES Act and now modified under the Stimulus Act. Also, a special thank you to the team of people that assisted me to put this presentation together. From the technical expertise and relentless fact checking provided by the PPP team of people in my office, consisting of Levi Herzog, Bob Wilson, Sharon Ramdarine, to my marketing person, Ashley McConnell, for the creation of the slides you are about to see. It would not have been possible to put such a comprehensive, up-to-date presentation together without this team. This is now the fourth webinar we have prepared. From the beginning, we have always said that the PPP created under the CARES Act was big, complicated, and had many unfair provisions. We're going to go through the changes in the PPP in detail, as well as summarize some of the other effects of the legislation that was just signed into law. Where else can you take a webinar that incorporates all this information, the effects of the potential changes in this massive bill that was signed into law just 11 days ago? I am going to bring up my screen. The Coronavirus Response and Relief Supplemental Appropriations Act, the PPP, the Employee Retention Credit, the stimulus is all part of the budget and the Stimulus Act that was signed into law at the end of 2020. It was actually signed into law on December 27th for a total amount of $2.3 trillion. It's 5,593 pages. It's the longest bill ever passed by Congress. We're going to focus today mostly on the PPP, the Paycheck Protection Program, and to a lesser degree on the EIDL and the ERC, the Employee Retention Credit, or what I like to refer to a little bit as the sleeper in this bill. Also, for those of you who tried to print out this PDF file and it consumes an awful lot of black ink, we're going to modify it to create a printer-friendly version that'll be ready in a couple of days. So the PPP program, $325 billion of new money for new loans and second draw loans. $284 billion just for the PPP, $20 billion for businesses in low income communities, $15 billion for economically disadvantaged live venues, movie theaters, museums. I'm going to get into that a little bit later, and there are other miscellaneous targeted areas. So if your original PPP calculation has increased due to a change in the SBA's interim rules, or a calculation error in the original application, or you just didn't get to it, you can now go back to your lender and ask for either an increase or submit a new form for a first round PPP. So this is a chance to fix any prior mistakes, and it's a chance for you to get a second bite at the apple. I've gotten many questions from people over the past few months. I didn't put in my compensation. I put in the wrong amounts. I didn't, include other costs. This is the chance you have to fix that to get more money, but you can't fix it if you have received forgiveness already. So if you've already gotten your loan and gotten your forgiveness, you can't go back and fix it. So also, if you're a new, there are new entities that are now eligible, including 501c6 entities. They can go for a first round PPP, and under the right circumstances, they can get a second draw as well. The bill calls for the SBA, gives them 10 days from the day the president signed it, which was December 27th, to clarify the guidance and create new applications. I'm not so sure they're going to make it. They don't have a good history of making the 10 days. It's already, this is the 11th day actually from the day you signed it. There are some loan processors out there that are accepting new first-time PPP applications, and they're holding those applications. So there are some processors who you can fill out this first draw PPP with. The deadline for the new loans has been extended from December 31, 2020 to March 31, 2021. If you've already applied for and received forgiveness, then you can't go back and adjust it. You can't fix it. But if you haven't gotten forgiveness and you haven't asked for the loan, you can either adjust your original application or you can apply for a new one. If you have applied for a original loan, or you can get a second draw PPP loan. So you may want to hold off on applying for forgiveness just to make sure that you've exhausted the first round amount that's available to you. You have plenty of time, and I'll go into this in a little bit, plenty of time to apply for forgiveness. I hope, can someone let me know if they could see this or if I have to make this bigger?
It's a little small, Bob, but it's okay.
It's a little small, but
If you
okay.
can make it bigger, that'd be great.
Okay, I can make it a little bigger.
Oh, that's lovely. Perfect.
Okay, so the second draw PPP program, that's what's created under the Stimulus Act. There are some new provisions that are applicable only to the second draw. So as far as eligibility for the second draw, it's the same rules of eligibility in the first round, except these things have changed. You have to have less than 300 employees. That's down from the existing 500 employee limit. You must have used up or will have used up all of your first round money before you apply for the second draw. And you have to demonstrate a year-over-year decrease in revenue of at least 25% in any quarter of 2020 compared to the same quarter of 2019. We're not clear as to whether or not this revenue reduction test will replace or merely supplement the original CARES Act subjective necessity certification. If you remember, when you applied for your original PPP loan, you had to certify that due to economic uncertainty, you needed the money. The second draw doesn't call for that. It calls only for this 25% reduction. But the SBA has been known to modify Congress's intent, and we're not sure if they're going to eliminate that certification. Types of borrowers have been expanded. So like I said, nonprofit organizations under 501c6, destination marketing organizations are now eligible, newspaper broadcasting companies that were previously ineligible due to traditional application of the SBA rules, and housing cooperatives with less than 300 employees. So I want to go back to, hold on to zoom the page. Okay. You're not eligible. You're not eligible if your entity is involved in political lobbying. Lobbying is pretty much defined as more than 15% of your activity is spent on lobbying. Entities affiliated with the People's Republic of China, that means a 20% or more ownership test, or if you have a director that's a resident of China. If it's a registrant under the Foreign Agents Registration Act. Entities that receive a grant under the Shuttered Venue Operated Grant Program. There's a new grant program for closed theaters. I'm going to go into that later. You can't get both. You can't get a PPP loan and the grant for the Shuttered Venue Operator. Public companies are now ineligible due to the outcry of so many public companies taking so much money from the original program. And entities that were not in operation on February 15th of 2020. And there are some other businesses defined in this section 120.110 of Title 13, including illegal activities like cannabis. Lenders are excluded, gambling activities illegal, and shockingly, live performances of a prurient sexual nature. So if anybody here is listening and they own a strip club, you could tune out pretty much now. To calculate the loan amount, If you remember, you had to calculate the payroll costs, and I'll go into that again in a little bit, your average monthly payroll costs, and then you got to multiply that by 2.5. That's the same. Seasonal employers are allowed to use any 12-week period that they want to calculate their average payroll cost. And if you're in the food service industry, you have a tax code of 72, starts with the 72. Then instead of 2.5 as your multiplier, you can use 3.5. That was a way to get the restaurants and caterers some more money. And the maximum loan amount is now 2 million, down from 10 million. So many people have been asking, how do I get my loan forgiven? The application for forgiveness starts with your bank. You don't apply directly to the SBA, you apply to your bank. The bank then gathers the information, submits that information to the SBA, and the SBA approves the loan forgiveness. Unfortunately, not every bank has the exact same process. So depending upon what bank you are with or you got your loan through, may affect what documentation and how you have to present it and when they're ready to accept it. But the process goes something like this. There's a thing called the covered period. The covered period starts on the day you got the money. And then originally it was 8 weeks. Then they modified it to 24 weeks. Then they further modified it to the borrower's choice of either 8 weeks or 24 weeks under the old rules. And currently you can use a period of less than 24 weeks to calculate the use of the loan proceeds. So I've had many questions of people say, listen, I've used up the money in 12 weeks or 13 weeks. Can I file for forgiveness now? Because I'm going to make changes in my number of employees. And under the old rules, you could do that, but the penalty, the haircut provisions for reducing your full-time equivalents or reducing your salary were based on either 8 weeks or 24 weeks, not the shortened period. It looks like under the new law that the haircut provisions will also be based on the shortened provision, but we're waiting for some more guidance from the SBA. Generally, for most people, 24 weeks is better. There are very few circumstances where in 24 weeks you won't have consumed more than 60% of the money in payroll. The exceptions are, some people spent all the money in 8 weeks, and by all means, then pick your 8-week period. And some people may have used it in 10 or 12 weeks. I think you should wait just to get a little guidance to make sure that the salary reduction and the full-time equivalent reduction won't affect you if you do that. Let's go. So the end of the covered period. So you've got 10 months from the end of the covered period to apply for forgiveness. There's no need to rush. I'll give you an example. If you applied for your PPP money on April 1st and you received it 2 weeks later on April 15th, and you elect a 24-week covered period, then your covered period ended September 30th of 2020. But you have to apply for the forgiveness by 10 months after that, which would be July 30th, 2021. So you still have plenty of time. Even if you had elected an 8-week covered period, you still have until April 9th of 2021. There's still plenty of time to make your application. So don't worry, you'll get this done in time. Okay, so in addition to the filing within time, the rules are 60% of the money must be used for payroll costs. And all of you who took the first 3 webinars, I'm sure you remember that, but for the benefit of the people who are here for their first time ever, I'm going to skip and come back to this in 1 second. Payroll costs. So payroll costs are defined as, for partners, it's pretty much the amount from your K1 box 14. and prorated for either 8 weeks or 24 weeks. 8 weeks would be with a maximum of $100,000 per year. So for 8 weeks for a partner, it's $15,000. And if you use 24 weeks for a partner, it's $20,833. $20,833 is not 24 weeks at $100,000 a year. They limited the amount that you could use for partners to 2.5 months, which was the same amount of money that you applied for. Owner employees, it's the same thing. It's 8 weeks worth of their compensation, usually on either a W-2 or again, from your K-1. Same limits, the 15,000 and the 20,833. And for self-employed individuals, it's the amount from your Schedule C earnings. Again, for either 8 weeks or 24 weeks with the same limit. And for non-owner employees, it's 100,000 over 8 weeks, which is 15,385, or for 24 weeks, which is 46,000. You only borrowed 20,833 as a maximum amount per employee. So if you use the 24 weeks, it's $46,000 you're getting for credit. On the forgiveness, it's hard to imagine that that won't consume all of your borrowing. So for, like I said, for most people, the 24 weeks should make it very easy to comply with this. If you choose the 8 weeks, it'll be a little harder. And it also includes various other forms of compensation, tips, vacation pay. I get a lot of questions about hazard pay. I had to pay people extra to come in during these times, or severance payments. I gave people, 3 weeks severance. Does that count? And severance payments do count. So 60% of the money for payroll costs, that's for the existing PPP loan. For the second draw, it's the same payroll cost definition, and they've added some more costs: group life insurance, disability insurance, dental, and vision benefits now count. You can't double dip on the employee retention credit. So if you used the payroll to get the employee retention credit, and I'm going to go into that towards the end of this, you can't use those same wages to calculate your PPP forgiveness. But for 2020, the PPP was a much better deal than the employee retention credit. For 2021, the employee retention credit has gotten significantly better. I also get a question a lot: should I write a check to myself? I'm a sole proprietor, I'm a partnership. Do I have to write a check to myself? And the answer to that question is yes. Form 3508, which is the form that you're going to use to get forgiveness, indicates that amounts must be paid to the owner. Paid or accrued, but paid would be better. So write yourself a check from your business account and deposit it in your personal account. I went through Exhibit A and PPP.
I am going to share some more messages from our Academy sponsors, which means I have to stop your share briefly, Bob. Sorry. Stealing the share. All right, here we go. Don't forget, these are the guys footing the bill, so be respectful and listen to their messages and use their services.
Hey, Academy members, Ross Maller from PM Legal here. We are New York's #1 most experienced process serving and private investigations firm, available to you 24/7. We served almost 200,000 documents in 2019. We handle new case signups, scene investigations, witness statements, obtaining police reports, medical records, and much more. Email me at help@pmlegal.com to discuss our services further and see why the readers of the New York Law Journal have voted us #1 in New York. Thank you very much.
Good morning, my friends. My name is Mark Horowitz. You know me from Lexitas, formerly Dietz, American Steno Barrister, and DePompo Court Reporting. It has been a pleasure working with you these last 6 months, getting your firms up and running with remote deposition technology. We've now opened our deposition centers throughout Metro New York following CDC guidelines. Our technology has been upgraded to accommodate remote depositions and hybrid depositions, as well as fully live proceedings in a clean and safe environment in our deposition centers. Call me now for a free firm or personal training on remote technology, 800-678-0166.
Good day, everyone. My name is Dave Hart with Hart Settlement Group, a member of Sage Settlement Consulting, the nation's largest plaintiff-oriented settlement planning firm in the industry. It's been a pleasure being an Academy sponsor for the last 14 years. Thanks again to our attorney clients and Academy members for your continued trust and support. As a full-service settlement planning firm, our team approaches planning on a case-by-case basis to provide injured claimants and their families with customized solutions to meet their unique needs and requirements. I welcome new and existing Academy members to call or email me to discuss new cases or to discuss any questions that you may have. Thank you, and we appreciate your business.
Thank you so much to our sponsors for keeping us going. And there is a list of all of our sponsors and their contact information in the back of the course materials. So you all have access to those course materials. I already put the link to them in the chat, but it's basically trialacademy.org/PPP 2021, I think is what it is in the chat. Yeah, that's right, PPP 2021. So you can look there. If you scroll to the end, you'll see all of the sponsors that help us out here at the Academy, and you can click on their info and check out their websites. So I'm going to end this poll, and I'm going to throw it back to you, Bob. You need to screen share again. Oh, you're on it. Look at you.
Okay, we're good?
What a pro. Good to go.
Okay. So as I was talking, you have to listen. 60% of the money used for payroll costs, it doesn't have to be 60%. It could be more than 60%, but 60% is the minimum that you have to use. And if there's a mathematical formula, you'll talk to your accountant to get into that, but you could use 70% or 80% or 90% or 100% for payroll costs. But the other costs are limited to 40%. The other costs include mortgage interest, rent for your leases. The lease had to be in effect prior to February 15th of 2020. So if it's a new lease starting after February 15th of 2020, it doesn't count. They have made it that renewal leases do count. So if you had a lease in effect prior to February 15th of 2020 and you renewed it, then the renewal counts. Don't ask me the question of, well, I only renewed it for half the space, or I renewed it for a different space in the same building or a different space with the same landlord. I don't have an answer for that just yet. Utility payments count, and there are now 3 new categories of new qualifying expenses. So there's a thing called covered operations expenditures, and that's a payment for software, cloud computing, and other human resources and accounting needs. That's all due to the pandemic. They realized people had to work remotely. It's not clear if those costs are counted if they're outside of the covered period. Remember the 8 or 24-week period. So we don't have an answer to that question. For the second one are covered property damage costs. Those are costs related to property damage due to public disturbances that occurred during 2020 that are not covered by insurance. Those costs are includable even if they're outside of the covered period. So the first one, we're not sure. The second one, we're sure they can be included. Actually, there's 4 categories. Sorry, I said 3 before I misspoke. There are covered supplier costs. Those are the costs to buy goods for essential services, essentially to the recipient's operations. I believe this is mostly for the restaurants and the food service industries. And there's covered worker protection expenditures. That's for your PPP equipment. Anything that you did to make your workplace safer, barriers, partitions, ventilation, whatever antiviral filtration. So anything you did for COVID protection for your employees. And that's also outside of the covered period. That's between March 1, 2020 and the end of the national emergency declaration. And there doesn't seem to be any end in sight for this. So now we get to, how do I get my loan forgiven? So the SBA has already released 3 forms. It's a 3508. There's 3 different versions. There's a new form coming that's for loans less than $150,000. It hasn't been released yet. We don't know what it's going to look like. It's in the law that it can only be a one-page form. So we know it's only going to be one page. We just don't know if the font is going to be 6-point or 15-point, and how many questions they're going to ask on this new form. Ostensibly, it's going to be simpler than any of these other forms. We're just going to have to see. I just don't trust the SBA. But for the 3 forms that are out there, they all ask the exact same information to start with. And on this page is all of the common information: the name of your entity, your EIN number, your phone number, who to get a hold of, your email address, your SBA loan number, the lender PPP loan number, the amount that you borrowed, the day you got the money, the number of employees that you, at the time you got the money, the number of employees at the time you asked for forgiveness, whether or not you got an EIDL loan, the economic injury disaster loan, as well as how much money are you asking to be forgiven. So all 3 of the forms have all of this information at the top. And then they start to get a little more interesting. So Form 3508S, this is the easiest one. If you qualify for this form, use it. There is no reason not to. It's the easiest form to fill out. It's got some really good parts to it for the borrower. It's only 2 pages long. There's only 3 pages of instructions. There's a signature, certifications, and authorization form. Yes, they do have certifications at what you use the money for. And I'll bring up this form in a minute. I'm not going to bring up the other forms. We just don't have time. And on the back, the second page is really only asking for demographic information, and that's optional. So it's really only a 1-page form. So in order to qualify to use this form, your PPP loan was less than or equal to $50,000. How many people qualify out of the universe, out of the 5.21 million borrowers? 68.5% qualify. You're not required to show any calculations. You're not required to show the amounts except the forgiveness amount. The full-time equivalent and the wage reduction haircuts are waived for this form. So this is really easy. If you meet this criteria, I'm telling you right now, take this form, get your forgiveness. You might want to wait and just make sure that you've gotten all the money you possibly can under the first round. But if you're sure of that, then you can ask for your forgiveness very simply. But you do have to submit all of this documentation. It's not just the 2 pages. All right, there's all of this documentation. There's all your payroll information, including bank account statements, tax forms, receipts of canceled checks, or account statements documenting the contributions to health insurance plans. You got to document your mortgage if you have it, document your lease if you have it, document your utility payments. So they all ask for this at a minimum level of information. So while the 3508S is easy, not to be confused with the 3508EZ form, it's simple to fill out the form, I should say. It does ask for all of this documentation. We're hoping that the $150,000 form does not make you gather all of these forms. So if you want to wait and see if that is the case, then fine. If you believe the SBA is just going to ask for the same documentation anyway, then there's no reason to hold off. So this is what the 3508 looks like. It's really a 1-page form. The second page is optional. It's just the demographics. At the top are the information I laid out before of what you need to fill out. And then these are all of the representations you have to make. There's 3, 5, 7 different representations. This is included in the back of the handout. It's relatively small type. It was made to look at on screen. When we produce the printer-friendly version, we'll give you a full-page copy of this form. I just want to catch up. Okay. Then there's the 3508EZ. That's 3 pages long with 4 pages of instructions. There's a calculation form, there's a signature form, and there's a demographic information, again, optional. Here's the criteria to meet if you want to use this form. You have to be self-employed and have no employees. That's one criteria. Or any borrower could use it if you have employees, but you have to meet this criteria. You didn't reduce the number of employees or reduce their wages by 25% during the covered period. So you didn't let anybody go, and you didn't reduce their wages by more than 25%. If you can't meet that, there's one other shot at this. If you did reduce the number of employees, but you didn't reduce their wages by more than 25%, and you reduce the number of employees because you couldn't operate as normal due to COVID health guidance compliance, then you still qualify for this form as well. So there are still many people that will qualify for this. It's a little tricky. You know, what if they shut me? I couldn't get into my office, but we're still operating from home. I didn't need 20 people. I only needed 10 people. But we were still running. We weren't, you know, our business is down 50%. Our business is up 10%. So this definition gets a little trickier, and many people aren't as comfortable with this one. But this form also eliminates the full-time equivalent and wage reduction, the calculation, the documentation, and the reduction forgiveness. But it eliminates it because you're certifying that you didn't reduce the number of employees and you didn't reduce their wages. So, and the same documentation that was required for the 35OS is also required for the 3508EZ. So if you can make that certification that you didn't reduce the number of employees and you didn't reduce the wages, you could also use this form. And then there's the 3508. That is everybody else. It's 5 pages long, 7 pages of instructions, broken down into the following parts. There's a calculation form, a signature form, Schedule A worksheet, and demographic. This seems easy when you look at it on this page. The 3508 is pretty complicated. You're going to need your accountant. My experience tells me there are very few lawyers who will be able to fill this form out without some help from some other professional. You got to calculate your payroll costs, your non-payroll costs. You got to show the 60-40 rule. You got to show the number of employees over various different time periods. You've got to show the wages paid over different time periods, as well as gather all the information. This one's a little more complicated. Fortunately, most people don't need this. And when they come out with this $150,000 threshold, we already know 70% of you have borrowed less than $50,000, and there's probably another significant portion that have borrowed less than $150,000. So the $150,000 form is supposed to be released within 24 days of enactment. It was enacted on December 27th. 24 days is January 20th. It's already the 5th. We have no guidance. We have no input. We have no feeling from the SBA as to what this is. But the law calls for the following information to be included on this form, and it can only be 1 page. So it's a description of the number of employees the borrower is able to retain, the estimated total amount spent on payroll costs. It says estimated. It doesn't even say actual. The total amount of the loan, attestations that you complied with the loan rules. You're still required to hold on to your records for 4 years. Your loan forgiveness will be reduced if your number of employees or employee salary by more than 25%. They're the same rules under the original PPP, the same rules that apply to the Form 3508, the full-blown form. Also, the SBA has put into law that your loan could be audited if fraud is suspected, and your lender has the right to ask you for more information than the SBA is requiring. So even though the SBA requires very little, your lender has the right to ask for whatever they want to ask for. So you make your application. Where's the minefields? What do you have to worry about? You know, the biggest worry is that you didn't spend enough money on payroll costs or the other forgivable costs in the covered period. In either your 8-week or 24-week or somewhere in between, you didn't spend enough money on your, to use up all the PPP money. It's hard for me to imagine that in 24 weeks you didn't spend the money unless you went through a significant reduction in your head count. That you went from 20 people down to 5 people. But if you even went from 20 people to 10 people, you should make it in the calculation. And again, if you cut their wages by more than 25%. So again, if you went from 20 people to 10 people and you cut everyone's wages by 50%, then you're not going to make it. But that's not the vast majority of phone calls that I'm getting. The vast majority of calls are, I had to let go of 1 or 2 people. Am I going to be okay? Or I had to cut my employee salaries by 10%, or I didn't give out bonuses this year. And for those people, I don't think you have to worry. Listen, you can do the calculation, but my gut feeling is that you'll be okay. Some people may want to hold off asking for forgiveness until this new form is actually released. So the good news here, more good news. The forgiveness is actually tax-free. Originally, Congress intended it to be tax-free. The IRS and the Treasury took a different opinion. They tried to backdoor it. They said that the forgiveness is tax-free, but you couldn't deduct the expenses that you paid for using the money. Congress has closed that door on the IRS. They've said explicitly that not only is the forgiveness tax-free, not only are the expenses paid for with the tax-free money deductible, the tax-free forgiveness will also increase your basis. So for partnerships or S corps that used to draw out all of their capital at the end of the year and then wanted to take this PPP money out, this will not give you negative capital, which could cause some adverse tax effects. However, there are some states that don't comply with the federal law. So California and North Carolina have already announced that they're not going to follow the tax-free treatment. So if you're listening to this webinar and you live in either California, North Carolina, or any other state that may follow, because they all need money, you may have a different effect for your state taxes than you have for your federal taxes. And the eligibility to apply for the PPP funds is extended to March 31, 2021 from December. So you can either get the second draw, or there are certain cases where you can get the first draw, use up the money, and then apply for a second draw. That would be a real home run. We don't have the forms yet to make the application, but they should be released very soon. If you didn't receive a first round PPP loan, you can apply for one now. You could use up the funds in 8 weeks. That would still give you a chance to apply again for a second draw before March 31 and use up most of that money. Of the second draw money, you might have to give some of it back. But this is an opportunity for the people who haven't gotten the money already. The people who have got the money already have already taken advantage of that opportunity. And also tucked into this bill, Congress put a provision in that the SBA is required within 45 days to submit its plan detailing how they're going to conduct the reviews and audits of the metrics used to determine which loans will be audited. So there is no doubt that the SBA is going to audit some of these loans. On the form 3508, the big form, the long form, there's a box to check. Have you borrowed more than $2 million? There's a really high probability if you check that box, you borrowed more than $2 million, that your loan's going to be audited. One would think that they're going to audit some statistical sampling of the other loans. I don't think they're going to audit too many of the 50,000 and less loans because there's just too many of them and not enough juice there for them to get anything. So that's pretty much the update on the PPP program. But tucked into the law, there's a couple of other things. This is what I refer to as the sleeper in the law. There's a thing called the Employee Retention Credit, the ERC. It was originally for wages paid after March 20th, 2020. It still is March 20th, 2020, and before the end of the year. The new act extended that end date to June 30th. So it made it the first 6 months of 2021. But here's the beauty of this. Under the new act, effective for January 1, 2021, eligibility for this credit was changed. You used to have a 50% reduction in receipts. Now it's a 20% reduction. And it's calculated the first 2 quarters of 2021 compared to the same period of time back in 2019. So you don't compare 2021 to 2020. You compare it to 2019. And if you had a 20% reduction, then you qualify for this credit. I have one client, a fairly good sized law firm, in 1 quarter had a 22% reduction. And the other reductions were smaller, less than 20%. But because they had a 22% reduction in 1 quarter, they qualified for this. They never had a 25% reduction, so they didn't qualify for the second draw. So this is a gift. This credit was originally 50% of wages up to $10,000 of wages per year for an employee. So the maximum you could get was $5,000 per employee. And if you got this credit, you couldn't get the PPP and this. The new law says you can get the PPP and this, you just can't use the PPP money for the calculation of these wages. But if you use up the money in the first quarter, you may have the second quarter, or maybe even more weeks than that to use this. And the credit is now up from 50% to 70% of wages. And now it's not per year, it's per quarter. So what used to be $5,000 per year for the whole year is now $7,000 per quarter for the first 6 months of 2021. It's now $14,000 per employee. So, if you have 20 employees, $14,000 per employee, $14,000 per employee over 6 months. This is a $280,000 credit, and it's refundable. You get this thing by applying the credit against your payroll tax return for the quarter. And if you're due, so that the company doesn't have to pay its share of the FICA tax. And if the credit is bigger than that, which it will be in all probability, then you get it, it's refundable to you. So you should get this credit over sometime in April or May of this year would be the first one, and then in July or August. And again, they made these provisions much more liberal for many more people to qualify. You should look into this, talk to your accountant about it. This is something that most people are not focusing on. And you can tell everybody that you heard it here first. So now with the employee retention credit, if you didn't take it in 2020, you can go backwards and apply for it. However, if you use wages, again, from the PPP funds, then you don't get both. You can't use the wages for the PPP funds and then count those wages to get the ERC credit. And the eligibility is, like I said, the reduction of 50% change to 20%. It's an either or, it's 50% in 2020, 20% in 2021. But also if you were subject to a lockdown for any quarter in 2020. And again, that's a thing that's harder to define for most people. There was a different limitation for less than 100 employees or more than 100 employees. I'm not going to go into that. Like I said, payroll costs that were funded with the proceeds aren't eligible. Okay. And then there's some changes to the EIDL program. They've allocated an additional $20 billion to the program. So there's more money now available in the EIDL program. It was originally a $10,000 grant. Then the SBA changed it because they were running out of money. They said, no, not a $10,000 grant. We're just kidding. It's $1,000 per employee. This legislation brings it back and it makes it very clear that the grant is $10,000, no matter how many employees. The SBA is supposed to issue retroactive grants. So if you only got a grant for 1,000 or 2 or 3 or 4, the SBA is supposed to fill up the bucket with the difference automatically for you. They have 21 days to do it. Let's see if they make it. And the $10,000 grant used to be a reduction of your PPP forgiveness. They didn't allow you to get the EIDL grant and the PPP forgiveness. Congress has now changed it and said, yes, you get both. My course evaluation just popped up.
You can just X out of it, or you can evaluate yourself highly, whatever you prefer.
I don't know. The interest rate's still 3.75%. The loan is 30 years. You must be located in a disaster declared county or a contiguous county, which is pretty much the entire US now. The entire US has been declared a disaster area because of COVID. And you have to have suffered a 30% economic loss during the 8 weeks. For an 8-week period from March to December, you have to have less than 300 people. There's some other small provisions. I think I'm just about getting to the last pages, so I'm going to talk really fast. Other provisions, there was $166 billion for the $600 checks. Anyone with $75,000 of adjusted gross income or less. I've had clients call me up. That money is starting to appear in their bank accounts. So that spigot is on. Then there's $15 billion allocated specifically for the shuttered venue operator program. So museums, movie theaters, live venue operators, if they were in business back in February 29th of 2020, they must be open or intend to open. They must have a reduction of 25% more in gross revenue, and most of these places have been closed, so they have no trouble meeting that. The maximum amount of the grant is $10 million. They can't get a PPP loan also, and the awards are going to be made in tranches. The first 2 weeks, if you experience a 90% or greater decline, you go first. Second 2 weeks, 70% greater, and then thereafter, all eligible entities. And before you shut me up, let me just get through this one last page. Enhanced unemployment benefits, not going to go into the provisions, $82 billion for schools. This is the one that I think most of you are going to enjoy, letter G, a temporary through the end of 2022 for the next 2 years. Meals are now 100% deductible if they're purchased at a restaurant. So the 3 martini lunch is back on. The floor for medical expenses was scheduled to go up to 10%. It stays at 7.5%. And there was a bill passed in the House to increase the $600 to $2,000. It looks pretty much like that bill has died. I give it a very small chance of passing at any time soon. And it is now 2:01.
Thanks very much, Bob. So as Michelle said, we actually have 104 questions, but I've kind of narrowed it down to 3 or 4 general topics that have come up in these questions, and that's what I'm going to pose to Bob. So Bob, the first question is, when the loan is ultimately forgiven by the IRS, what form will be issued that the taxpayer will then have and give to their professional?
There is no form that will be issued as of yet. It hasn't called for a form. They haven't announced a form. What you're going to get is a confirmation from your bank that the loan has been forgiven. You'll give that paperwork to your accountant.
Okay. You mentioned in the presentation the $2 million limit. Is the $2 million limit the limit for just the second round of loans, or is that a combination of your first loan and the second loan together?
No, you get another $2 million bite at the apple.
Okay. That segues into a question that I think came up more than any other one. Is it better advised to amend your first application, or do you submit a clean new application? what's the best practice if you realize, wait a minute, I left money on the table that I could have gotten?
They haven't given us guidance or the form yet, whether it's going to be an amendment or, I doubt it'll be a new application. It'll probably be an amendment to your original application. And by
And
all
if-
means, you should do it.
And if that's the case, Bob, what is the best practice advice in terms of if you think you're going to get a second loan, should you wait for the forgiveness form and forgive it all at one time, or try to forgive what you have now and then seek a new application? Which do you think makes the most sense?
I don't think it's going to matter. I don't think you have to wait. Well, first of all, you can't wait until the end of the second covered period because that's 24 weeks after you got the money. So that probably will be past the end date of when you can apply for the first loan's forgiveness. So make sure you don't blow the end date on the first one.
With regard to the 25% reduction that you mentioned for the second round, a question that kept coming up is that based on gross revenue or net profit? How is that determined?
No, it's on gross revenue. The better question is whether is this accrual or cash basis? And it's probably based on the way you file your tax return, but it's not on net profit, it's on gross.
And is there definitive information on that, or that's still subject to discussion or rulings?
There's no definitive information, but generally they would require you to use the same basis as you prepare your tax return.
When you were talking about the time period in which to seek forgiveness, and you were talking about, I think you said a 10-month period, is that 10-month period, what is the starting date? Application date, the time you got the loan, or the time you exhausted the loan?
The 10-month period starts the day the covered period ends. So the covered period was originally 8 weeks or 24 weeks, and now you could pick a period in between the two. So it's really at the election of the borrower when the covered period ends. But when it ends, it's 10 months from that.
Well, that brings me to another question that kept coming up time and time again. In the original application, did a borrower have to say how many weeks they were going to use, whether it was 8 or more?
No, that's strictly a Monday morning quarterback decision.
So is there any, how does a borrower change from using the 8-week parameter to a 24-week, or you get to do that now after the fact?
There's no change in it. You pick 8 weeks or 24 weeks or some other period in your application for forgiveness.
Okay.
You don't make that decision on the application for the loan. It's made when you apply for forgiveness.
When you talked about the backup documentation that's required, is that backup documentation something that is attached to the form from the government for forgiveness, or is that what we think the banks are going to ask us to support our application for forgiveness?
Well, the backup documentation that I articulated in the presentation is what the SBA forms call for. So that information is actually submitted to your bank. Remember, you don't do anything directly with the SBA. You deal with your bank deals with the SBA. So you give that information to your bank, and then what the SBA asks for is between the bank and the SBA.
And is the institution that you asked forgiveness for have to be the same institution that gave you the loan?
Yes.
And do we have an idea of how long the process is going to take from the time a forgiveness application is put in until someone gets notification? That's come up a bunch of times.
This is the government. They work very fast.
Okay.
I can't begin to imagine that if you submitted an application today under the old rules, I would guess it would take 2 to 3 months to get a response, but that's probably going to take even longer than now that this happened.
So for people that got the money last year and then the forgiveness comes in 2021, obviously we are now, a question that's come up is, for purposes of determining income and expenses for last year, is the premise now you take the deduction as the money was spent and then you'll wait for either forgiveness or whatever else happens?
Well, you take the deduction anyway. The forgiveness is tax-free. So, and if you suppose you borrowed, I'm going to make up numbers, $300,000, and you only spent $250,000 of it. So you're going to get forgiven for $250,000, The remaining 50,000 is going to convert to a loan. You have to pay that back.
And where does it stand in terms of what the terms of that loan would be, when the payments would start, what the interest rate is, and things of that nature?
Okay, so I've touched some of that in the presentation. It's a 3.75% interest rate. I think it starts 10 months after your covered period ends. And it's payable, I forget over how many years. I could get that information.
And Bob, to the extent that the loan, is it an all or nothing, or when it comes to issues of forgiveness, is it that part of it can be not forgiven, or is it 100% or 0%?
No, it's not an all or nothing. It's whatever percentage of money that you spent on covered costs, payroll costs, and other eligible expenses. So again, if you borrowed 300,000, you spent 250, then 250 will be forgiven.
You made reference in the presentation to writing a check to yourself so that there was the transaction showing the money was going to the principal. A couple of people asked if there was a distinction between a wire transfer or a check. I'm presuming the answer, well, I'm not going to presume. What is your view on that?
No, I think any evidence that you took the money out of your business account and put it into your personal account is evidence that you did it, whether it's a check, a wire, an ACH debit, or whatever, PayPal, I don't care.
So long as it's a transfer, not a ledger sheet adjustment that you paid $100 for something and it's charged to you individually.
I would tell you to make the transfer. There's a question in certain court cases as to whether or not if you do a ledger transfer to your loan account, that would suffice. But why play around with it? It's such an easy thing to do. It's writing a check to yourself.
And finally, Bob, the issue of the form and the expectation that we're going to have a new form within a certain number of days for the 150,000 or less. Is there any expectation that any of the other forms are going to be changed? And if so, what is the time period for that? Because people are anxious to start the process.
There's no expectation. The law calls for a form. I think there's a 50-50 chance that they're going to take the 3508S and modify that to the $150,000 parameters because it seems to be very similar. But they may just come out with a new form.
Finally, you mentioned that there were a couple of states that were taking a different view of the tax treatment as the federal government were, or it is. Is there any indication for people in New York, New Jersey, or Connecticut who are the primary viewers of this, how, if in any way, that will affect them?
Not yet. So I would say that New York, New Jersey, Connecticut typically couple their tax calculations with the federal government, although there are some add backs that are unique to the tri-state area. But no, there's no definitive answer to that question yet. Historically, the tri-state states have followed the federal lead, but we all know they all need money. So I don't know what's going to happen here.
Bob, I want to thank you very much on behalf of the Academy. This was incredibly interesting. It turned a topic that could be dry into something that truly was informative for the viewers, because everyone's very anxious, because this is a real life event for everyone that's listening and will be watching this eventually. So Bob, thanks very much. And Michelle, it's back to you.
Thank you guys both so very much. This is great. You'll probably be invited back for a fifth time. They keep screwing with this law. We'll keep having you back.